Recession is coming. I'm not saying that because it sounds scary. I'm saying that because there is number of reasons I am assuming in the next 6 to 12 months there might be a lot of stuff happening, and that's gonna cause the recession. Click the link down below and claim your first free stock with a stake, which worth around like $100 sometime or even more, unless you don't like free stuff. None of us predicted that the war might break up in the year 2022. This was so unthinkable. It is not even possible to think about what's going to happen for the rest of the year 2022. But there is a lot of assumption that a lot of stuff might happen. And that is so unthinkable to see where we are heading in the year 2022. In the next few months, a lot of stuff might happen. One thing is quite crystal clear, that the war might go for the longer than we are anticipated. However, the war impacted number of areas like commodity. Commodity prices are quite high. Fuel, gas, and other commodity prices are quite high, and they are skyrocketing. Inflation is rising. Inflation is putting a lot of pressure on the every single price tag. Eventually, this will cause the Fed to raise the interest rate, and it is putting a lot of pressure on the Fed and the US economy and the rest of the world, and even it's impacting Australian economy as well. Supply chain disruption. It is so mind-boggling that to think about when you order something and it is so delayed because of the supply chain disruption. So the risk of recession is quite high in terms of commodity price, inflation, interest rate, if the Fed increase the interest rate. So probably you're thinking, in this risk situation, what I am doing. Simple thing I have been doing in the past few months, and I am dollar cost averaging. Before the year 2022, I sold a little bit of my position from the stock. Just I wanted to get into real estate because my exposure to the stock market was quite high, and I thought I should be putting a little bit of my money into the real estate, because I thought like the real estate would be a good investment opportunity. So that's another plan I am working in the year 2022. I don't know if the central bank and the Fed decided to increase the interest rate. Not sure if the investment property or investing into the property would be an ideal investment idea. If the interest rate is going to be increased by central bank or the Fed, I don't know if the property market is going to be outperforming or not. However, surprisingly, in Australia, the demand for real estate is quite high. So yeah, in the year 2022, I decided to take some of my position from the stock market and deploy them into the real estate. I am working on it. I haven't done it yet 100%, so I am still working around and looking around and see and trying to understand the real estate market. It's so confusing because the prices are going extremely high due to lower interest rate. I don't know if the central bank increased the interest rate, probably there would be some delay or some changes in the property prices. Yeah, I'm working on that. In terms of stock market, what I am doing at this stage, I am investing in a few companies which I am thinking they are going to be outperforming in the future. As of now, there is so much opportunity in the stock market, and the risk around those companies are quite high. There is a famous saying, if you take too much risk, it might kill you. And if you take too little risk, it's not going to take you anywhere. You're gonna stay the same. So I came to this conclusion: if I don't invest into the great businesses or great companies, I might be regretting in the future. I might be risking by just holding cash against this hyperinflation, which is not a very smart move. I am thinking just dollar cost averaging. I'm just investing in a few companies like Amazon, Google, Tesla, and a few other companies, just less than 5, yeah, definitely. And I am just deploying and making my position at this time because I'm thinking this is the right time, yeah, and they are dropping. The more they drop down, I am buying. So what my strategy is, basically I invested, let's say if I have $10,000, I invest like $2,500 this time, and then like if the stock price drop like another 10%, I will deploy another like $2,500. If the stock price drop another 10%, I will deploy another 2,500. So similar like that, 25%, 25%. Every single time the stock drop like 10%, I will deploy 25% of my allocated asset cash for that company. So that's a strategy I'm working and I have been exercising in the past few months. And yeah, and the stock market is dropping down. It's not a bad time to invest. A lot of people take the opportunity. I'm sure like in the next 12 months a lot of stuff might happen. There might be a recession, but hey, dollar cost averaging is not going to be harming you. And to my understanding, dollar cost averaging is not going to be hurting me. If I stay away from the stock market, I'm missing out. If I deploy too much cash in the stock market, probably I'm gonna burn out. And I am just dollar cost averaging every single time. Yeah. So be mindful of what you are investing and what you are buying. Yeah. Make sure to buy great businesses. Yeah. Alright guys, I hope you got some value out of this video. As always, a huge thank you for watching this video, and be sure that brighter days are ahead of us. Yeah. Get one free stock with a stack, link in the description.